Everybody, this is Jim at SP500chart.com. It is Monday, February 17th, 2020. Markets aren't doing anything today because it's President's Day, and this is our weekly review for the week ending. Let me do my math again here. Valentine's Day, February 14th, last Friday. Before we take a look, first I want to say I apologize. I've been kind of ill over the past 4 or 5 days, and just feeling better, starting to be on the mend here. So before we take a look, let me remind you, as always, the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. First chart we're looking at here is a weekly chart. Each one of these candles is a week. And as you can see, we've now had two pretty nice green candles week before last, right here, and last week. We closed at an all-time weekly high of 33.80, according to the BATS exchange here. The figures may be off by just a little bit if you look to the New York Stock Exchange, but here on the BATS exchange we show 33.80.16, and you know what that means. You know that means something happened this week. And if we look at things on a daily chart, there's our daily chart. What that means is on Wednesday of this past week, we met that 33.70 target that we first started talking about. Let me zoom this chart out. We first talked about 33.70 back, I think it was March, when we saw that this might be an inverted head and shoulders pattern forming back here. I think it was March of 2019, but I'll give it a little bit of leeway on that. I will say for sure by the 1st of April, we were talking about 33.70 being our target, and there's that line put on that chart that measured that target, and there you see it has been met. Now, that doesn't mean, excuse me, it doesn't mean we're done. I've been doing that a lot, so just bear with me. The reason is, as we started to work things out through the middle of 2019, it started to look like maybe this inverted head and shoulders pattern right here was just part of an even larger inverted head and shoulders pattern that has an even more impressive target up here. Instead of 33.70, we're more like 38.40. And so that's where we are right now. We have successfully made this target, proving once again that the chart, well, I don't want to say it can be trusted. You can't implicitly trust a chart, but I think you can look at it and say, well, is that just another coincidence that we see another inverted head and shoulders pattern? We have another target from it, and that target hits. What's amazing is we have yet to really see any kind of failure in these patterns over about the past 10 years. One of these times it's going to happen. It's got to. But we just haven't seen it yet. So, here is your week right here. We started the week with that descending wedge that we picked up 2 weeks ago with the idea that we get out of that wedge, it should propel us up to challenge that 3370 target area. And that's exactly what happened this past week. It really played out beautifully. So, anything to be learned about this week in general? I don't really see, if we look at things, say, like on a 5-minute chart, I'm not really picking up much here in the way of any kind of short-term support or anything like that. We did, on the 11th, we did notice this bull flag here. And because of that bull flag and where it occurred, I think we may have even more room to run to start this week, tomorrow. Just another interesting little thing is we gapped up on Tuesday. And remember, I do not believe that gaps have to close. I'm not a believer in that. I think the reason people sort of buy into that idea is because, A, gaps usually do close. And when they do, you usually find some gap support if it is a gap up. And that took place on Tuesday the 11th. But really, for the most part, we spent Tuesday, Wednesday, Thursday, and Friday pretty much going sideways. So at this point, I just don't, is this a consolidation? Have other people been looking at this 3370 level? and now that we've hit it, they're like thinking, I'm going to lighten the load. That is a target, but I'll remind you, it is a minimum target. Just by reminder, back in 2008, 2009, we had an inverted head and shoulders pattern that had a target of 1340. We are now at 3380. So obviously 1340 was a minimum target. And by the way, I was there looking at that at that time too. So that's actually pretty fresh in my thinking, even though it was almost 11 years ago. So, excuse me, my voice is starting to give out. So let's just see if we're coming off this descending wedge off this lower line of support, and if it's in the cards for us to come back up to this level here. Remember, that green line is actually a line that we broke back in the third week, I think it was. Actually the beginning of the third week, fourth week of January. So this line should be resistance going ahead. But remember, it's not unusual when you come out of a fairly narrow, aggressively advancing channel. I don't think it's that unusual for you to break that channel but still continue the trek up after some consolidation. But that move up will almost always continue to be underneath that line of broken support, turning that line into resistance in the process. So let's see how that plays out this week. Look, guys, I'm going to sign off and just thank you for taking time out of your holiday today to watch this. And thank everyone who is a subscriber for your very kind support. Take care.